Good morning, everyone. It's Friday, 8:05 a.m. I'm Vince Lanci, and this is the Gold Fix Market Rundown. Today, we're going to try and get to the bottom of the gold market right now. It has been violent. It has been neutral. It is violently neutral. We're also going to discuss Trump's UK trade deal as analyzed by Goldman Sachs. So let's get to the markets. 10-year yields are 4.39, up 1. The dollar is 100.39, down 24. The SPX is 56.84, up 19. The VIX is 22.14, down 33 basis points. Gold is 33.31, up 25 and change. Okay. Silver is 32.55, up 15 and change. Copper is 4.53. Unchanged offer. WTI is 61.29, bid up 80. Natural gas is 358, bid up 4. Bitcoin 103,034, down 200. That's been on a torrid run least recently. Palladium is 981, up 10 and change. Platinum 986 and change, up 3. Gold, silver 102.30. Soybeans 1038, up 5. Corn 445, up 4.5. Wheat 534.10, up 2.5. Okay. There's our homepage. Top left-hand side, City Miners. Top center, that's an academic piece that we put together, essentially a culmination or a pit stop, I guess, in the things that's going on in the marketplace. The culmination of identifying the Russia-China gold for oil deal and what it has led to very recently, in combination with the history of bullion banks and how they hedge, and Stephen Moran's Mar-a-Lago deal. It is a proposal. It's a paper on what we think is probably starting to happen now, if not soon, and that is U.S. government hedging gold exposure after they get done buying it. Lower left-hand side, Goldman, Trump announces UK trade deal signals China optimism. Let's get right with the first part. Trump's UK trade deal. The announced US-UK deal yesterday leaves 10% baseline tariff intact for most partners, but shows flexibility on sector-specific tariffs. Trump's comments suggest possible easing with China, but renewed risk of targeted tariff hikes elsewhere. Goldman says that Trump announces the UK trade deal, signals China optimism, and there's risk elsewhere. Essentially, well, let's keep reading, and then I'll tell you what I think. Probably the most important part of it is the tone shifts on China. Retaliatory tariff removal expected. Trump adopted a more conciliatory stance on U.S.-China talks, quoted as saying, quote, "It doesn't matter who made the first call." He emphasized China's willingness to make a deal. He projected progress over the coming weekend. Goldman Sachs continues to expect removal of reciprocal tariffs soon, with remaining hikes of 54 percentage points U.S. and 34 percentage points China still in place. Okay, the first part is this, just to get the meta part out of the way, like I like to obsess about. Trump's doing the carrot stick approach. If he's going carrot with someone, he's going to stick with someone else. And so he's changing. He's good. He's a one-man good cop, bad cop situation, right? So burn Canada, burn Mexico, love Russia. That's when this started. Right now it's love Canada, love Mexico, or maybe not love, but working towards it, and then cut a deal with someone who's willing to cut a deal. First mover advantage, so to speak. And the UK is probably the weaker sister out of the trade partners post-Brexit and other reasons. So a deal's cut with the UK, and now he's going to be good cop with them and pivot towards China as in a conciliatory fashion out of strength, and pivot towards Russia slightly negatively now. So that's the meta take, right? So we get that out of the way. The Trump take, right? The Trump biography take. Specifically on the tariffs themselves, you may notice he kind of went back and forth in the beginning. He started with global tariffs, right? And that's where we are now. We're at the universal tariff is the term that they use. And so I think he's found his zone in that area, meaning he and Bessent have come up with the plan is you tax everyone, right? And then you pull them off based on negotiations. So basically, you make them all feel the pressure, and then you let them come to you, or you go to them one at a time. And then you take universal tariff off and you negotiate certain industries, or you leave the universal tariff on and you take off certain industries. So in India's case, there's a breakthrough on cars. There's a breakthrough on this. There's a breakthrough on that. In the UK's case, it's a different situation altogether. But there's concessions going along with these as well. So, and you probably won't, you have to read the fine print on these, and we have not done that yet. Anyway, so now it's kind of like this weekend could be big news for China. In the back of my mind, I'm concerned, not concerned. I'm aware of the fact that China is, Trump can be like Beethoven. There's a movie scene with Gary Oldman where he says Beethoven starts out strong and then he kind of loses it. So the shock and awe concept, the press was just inundated with deal this, deal that, deal this, deal that. And again, you cannot afford to think he's full of shit. Okay. When he gets close to the finish line with someone, he'll do that. And if somebody pulls back, he has to redirect the press. And that's what he does frequently. In this situation, though, I think the weekend could be eventful. So let's see. And gold is up. And you're saying, well, if the weekend's eventful, why is gold up? Because everyone's been selling the last 2 days because of the UK deal. And now today, people are saying, let me cover some shorts. You never know what the hell's going to happen. That's why we're up today, aside from the fact that the dollar is weaker. Okay, so moving on. We're going to do the gold violently neutral thing at the end today because it's going to be part of a technical analysis commentary. And it's kind of a preview of what we do on Sundays in our Sunday discussions. So next, market recap. Wall Street ended higher as investors cheered the US-UK trade deal and President Trump's remarks hinting at more consequential talks with China. Treasury yields were up. Gold extended losses while the dollar firmed. Oil prices rose on demand optimism. Canada's main stock index edged higher as investors also cheered corporate earnings, as well as limited bilateral trade deal between the US and UK that could signal an easing of tariff-related uncertainty. There you go. Today, a lot of Fed speakers. Nothing, Powell's not speaking today, so I think today's keep the camera on the Fed type of thing. Next, related posts. Goldman, Trump announces. We talked about that. Gold reconsidered. We talked about that. City miners, you know about that. Gold XPM. India, Pakistan's history conflict. That's a nice story unlocked. Essentially, it gives you a nice list of 10 things to keep in mind. And the reason that we titled it India, Pakistan's history of conflict, because there are changes. So, for example, the UK used to factor very big into these, but not so much now. So it's a nice little piece. I forget who wrote it, but I will do that. Let's get to trying to figure out what the hell's going on in gold. We start with the gold futures chart. And this is a line that we drew when we were talking about the market having been close to breaking this ridiculously steep trend line. And it looks like, we're on the cusp of that, and it's trying to make up its mind. At the bottom, you see volumes, and we're looking at volumes a little bit more closely now. When open interest is this low in gold and it's that volatile in the market, you want to start watching volumes, and that's what we're doing in our style. Again, we're trying to figure out what the hell is going on here. We know what's going on. The question is, we're trying to get a bias towards which way the market's going, and we have none right now. So right now, what you're seeing is a market since the market's lower and then higher, it's right in there. With the market having a range like this, with the open interest doing this. Okay, so I have bullets here. I'm going to say them in different orders after I give you the main point. The main point is big money, smart money is getting out while short-term gambling is getting in. That's what this reflects. Okay, there are two types of big money, smart money. The big smart money getting out, taking profits, is selling the rally. That's your probably your long bullion bank swap desks and your macro discretionary funds that have been long since, since the cows were born. The other smart money is the macro discretionary quant guys that are selling it because they see the statistical reason for the market to retrace, and then it goes down, and then it goes back up, and they're stopping themselves out. So they're also big, but they're smart because they're covering their risk. The smaller money, or the more speculative money, are number one, Shanghai specs who buy on the China Open. Now, it's not just, they're speculative. They're as powerful as any American hedge fund. Maybe not as big as macro discretionary, but they're pretty powerful. They've eclipsed American CTAs as being important. The other smaller players are American CTAs who will sell on weakness. Not a lot, but they'll sell on weakness and then they'll stop themselves out if the market rallies. The other smaller money will be the same American CTAs who buy on new highs breaking out of that channel. Okay, so that's the background. That's what the players are doing, and we'll get into where China's physical demand is in a second. But the pattern that we're looking at here is this is what we saw. The market rallied when the open interest continued to come off down to here. Okay, that was bullion banks covering shorts. Okay, this is the market dropping and the open interest dropping. That's macro discretionary selling, and some actually getting short on the idea that the market is due for a big retracement. So that's the micro, right? So let's zoom out a little bit and let's pay attention to this. What happens when open interest bottoms in gold? So here's your bull scenario, and it's powerful. When the open interest bottoms or shows signs of bottoming, for the period that it chops around on the lows, going back to forever, since the beginning of time, the gold market goes sideways to lower. And the reason it does that is because long speculators are not playing. And we know that long speculators are really not playing this market right now. Okay. The market will typically go sideways until there's some reason to get long, a trade deficit or a budget problem or a war. And those rectangles show that at each bottoming, the market goes sideways and lower. And these last three were very significant. Now, you can make a case for the higher lows and lower highs and all that stuff, and we've done that before too, but we're not doing that right now because we sense COMEX may be a little bit broken. Okay, so inevitably, going back to forever, not just on these three periods here, when this happens, when the open interest breaks out higher, you buy it. Okay, so where does the open interest break out higher? Well, that's the art of it. You have to figure that out for yourself, or use discipline and speculate on it. Now, there are moments where the open interest breaks out higher on a down move, and that's when we get those fish hooks that I talk about. And then the market just reverses and rips. So that's why I say sideways to lower as the open interest bottoms. Then the open interest takes a decided turn upward, and that's time to get in. So that everything I just said to you argues for a much bigger, higher move to come when they get in. And you've heard me say before, you've heard us say before, that ETF buying, if it gets back to where it was during the COVID crisis and the onset of the Ukraine war, then gold will trade 3,600 to 4,200. Now, that was when gold was trading 3,000. And the ETF buying has returned somewhat, but gold has rallied it's rallied $400. Okay. So you could say mission accomplished, but I don't want to say that yet. But I will say if ETF buying gets back to where it was, the 3,600 is looking like a lower price now. I'm not saying 4,200, but you get my point. So this is the situation. There is one difference now. So here's where the water gets poured on it. If you're wondering why I'm speaking this way, this is a premium conversation, right? There is one difference. Well, there's actually two differences. One, the difference is the market is extremely volatile up here now, and that suggests, as I said before, smart money getting out, dumb money, for lack of a better word, getting in, and it suggests that the smart money, profitable or not, is waiting for definitive news. And that's why, with these big ranges, the open interest is really going nowhere. As the market rallies, the macro funds are selling, right? And the FOMO boys are buying, right? Okay, so open interest is nowhere. Or as the market drops, right? The macro quant guys are selling and somebody's buying, and that somebody is probably bullion banks covering shorts. So there's a big, well-balanced, violently, neutrally well-balanced group of players playing right now. And we would call this, historically, it's tourist time, meaning it's probably a really, really good trade market for intraday hourly charts, but you're crazy to take a long-term position until there's a definitive news item out. Now, if you have an insight that I don't have, that's fine. But so there you have it. That's the first scenario. The second scenario is, well, this is the volume situation. The volume situation is telling us that this is the bearish situation, right? The volume situation is telling us that the market is being really capped by someone with big volume. And the dips are being bought pretty aggressively, but the chasing up has decreased. So next. Okay. Here's the thing that you might be able to sink your teeth into, right? So where's the violently neutral part? On the first, actually the beginning of the second day of this, we said this is either China buying or someone front running China buying. And it is. And then it got down here and it found the China buying. Now this area here, if you're looking for a way to look at it, that's your violently neutral. This is short covering and FOMO buying, including Shanghai. And this right here is where your China physical is. The good news is the market has not touched down there. The bad news is if peace deal comes out, it's not bad, it's risk. China may just pull their bid and lower to here, or whoever they're buying for. Okay, so to give you a little bit more consolidated, again, we're just trying to give you a behavioral understanding that may complement your own technical situation. So when the market is here, bullion banks and China front running comes in and takes it higher. Okay, that was bullion banks the first time. That's actually in here. China front running, we'll call it. Down here, we sniff in that area and the buyers come out of the woodwork. Now, this is the initial line that I drew before, right? This was the channel. Remember I said down to here, if it holds here, it should go back up here quickly. And wow, that really happened quickly. And then it got above, and I said, okay, this is really good, really good. And as long as we don't break back into here, then I didn't know what happened here, because who the hell is selling here? That's the mystery, and that's really kind of pissing me off. Okay, so the market is capped. The market is capped here on the outside. China physical buying, a mystery seller. China front running, and you're buying in here is FOMO, Shanghai China buying. And this is the front running, the big seller. So here's your big seller in here, and here's probably your bullion bank selling in front of them. Anyway, long story short, or let's make a little bit more less convoluted story. Violently neutral means trade the range if you're a trader. Don't be committed unless you have to be. If you're going to be committed to an opinion, I think the trade resolution is going to resolve this way or that way, then, please use options, but do your own due diligence on that. As to us, well, let's see. We had a butterfly on that worked out perfectly. Very short-term butterfly. We were short call spreads. We were the idiots in this trade. We were short call spreads. Converted them into long call spreads. Got neutral near the high because we had no idea what's going on. And then the market came off, and we're just like, fine, we give up. We'll just watch. So I think it's a day trader's market. Now, the other thing I wanted to show you is, see these three lines here? I'm looking at a product called Polytrends. And now we're ready to start using it. Those three lines are my lines. And here's the overlay. And these are the poly lines. Poly put a line up parallel with mine. So let's say my line is, close but no cigar, where their line is close but no cigar. And this line, he just started a line over there. Here, I'll hide mine. Where's my line hider? There we go, right? So here we go. That's line one. That's my first line. And that's my other line that I had back here. But he drew it a couple days ago. This came in a couple days ago. And here's the line I drew last week. So the moral of the story is, I think this is usable now for us. Some of the lines it draws the same time I do. Some of the lines it draws afterwards, but it may be a time saver. We'll be using this more in the founders classes as I figure it out, and then we're going to start day trading with it. To summarize, Donald Trump's US-UK deal announcement over the last 48 hours has given all markets a reason to pause and reassess. Stocks have taken it bullishly. Gold has taken it bearishly, today's move notwithstanding. And market players are pulling out of markets as they position themselves or keep some powder dry for the next news item, which could happen as early as this weekend. With regards to gold itself, we call it violently neutral and believe that smart and disciplined money is getting out and short-term gambling money is getting in. We believe that historically speaking, this augurs for a higher move if the market open interest starts to uptick. But until that happens and an event is no longer on our radar, we're violently neutral and have no opinion directionally. I'm Vince. Have a great weekend.